So we're kicking off our morning session now at the SFF Day 2. And I'm delighted to be joined by Matt Osborne from Ripple, who leads the European and UK policy work. So thank you very much for coming and speaking with us today about what you do at Ripple.
Thank you for having me, Chris.
So maybe just to kick off with, obviously I think what Ripple is probably very famous for in lots of people's minds is obviously XRP. But you obviously have kind of like a wider infrastructure around various other things, cross-border settlement, tokenization and so on. So maybe you can talk to us about how you define kind of like Ripple's core business today and how XRP kind of fits into that.
Yeah. So Ripple is a company that has been changing a lot. We have our roots in cross-border payments and using the XRP ledger to move value around the world extremely quickly in a matter of seconds. And we operate a cross-border payments network called Ripple Payments, which is used by financial institutions to move funds and make cross-border payments. But we've been introducing a number of new products over the last few years. So, for example, we have begun to offer custody services. So we sell a custody software product which financial institutions like banks and payment systems can use to self-custody or offer digital asset custody services to their customers. We also have a stablecoin which we issued about a year ago called RLUSD. That's a USD denominated stablecoin, and we reached a very significant milestone last week of $1 billion in market capitalization. So we're very happy with the progress there. And then, we've seen a number of significant acquisitions by Ripple this year, which is further building out our product stack. So we bought a prime broker called Hidden Road, which is offering brokerage services across traditional financial markets and digital assets. Mm-hmm. And we also, we bought a firm offering treasury services and also a secure wallet provider too.
So that's very interesting, and I think you can hear very clearly that your customer base is actually quite leaning towards traditional financial institutions or institutional kind of clients. And how do you see them kind of using your technology? Are they buying it as a replacement for what they have as their existing stack, or how does it kind of coexist with what?
It's a bit of a mixture. So I think a lot of financial institutions, especially banks, tend to use our custody software, and that is an example of something that just doesn't exist today, because often you have a bank that wants to get into digital assets, wants to offer digital asset services to its customers, and we provide the infrastructure for them to be able to do that. So that is a new business line often for banks. But then when it comes to cross-border payments, obviously cross-border payments happen today. There are existing rails using banks, using SWIFT. And we offer an alternative to those based on crypto, which is much more efficient, much lower cost, much more transparent.
Okay, what do you think is actually kind of like hindering further uptake of this technology by these kind of institutions, and maybe in the short and then the kind of like the slightly longer term? What are the barriers?
I think there's a mixture of things. I think the first one would be regulation. So we haven't really had regulatory clarity over the use of crypto technology, in particular by regulated financial institutions. So that could be the use of stablecoins, for example, or the use of digital market infrastructure. And what we have seen is that when a jurisdiction introduces regulation or clarifies what the regulatory treatment of digital assets would be, then you see a surge in adoption. So we saw that in the EU, for example, after MiCA was introduced. So that's regulatory clarity is definitely one thing. Another one I would mention is simply knowledge and education. So this is a new technology. Knowledge of it is building, but it's still generally at quite a low level, and that applies both to policymakers and also traditional firms, many of whom will actually come to Ripple and they'll have a general idea of what they want to achieve, but their understanding levels are not that great. So that's a journey that we can help them on.
Okay, yeah. So, and I think that really resonates at the moment, in particular, because you're quite right that the rollout of regulatory frameworks that we're seeing at the moment is leading to a big uptake in adoption, particularly around kind of like cross-border payments use cases at the moment. Maybe then talking though about interoperability, since, as I say, it is traditional financial institutions that that are your clients, and if there's already a sizable proportion of kind of global investable assets are still in the kind of shall we say, at least medium term, if not long term, going to be held on traditional rails. I mean, 250 trillion US dollars or something like that is kind of operating onto those traditional rails. How can we kind of like simplify the kind of divide between those trad-free rails and the new technology to make sure it's kind of seamless?
I think you're absolutely right to point to that issue, Chris. I mean, interoperability is a key challenge for the industry and for policymakers. Put simply, you have a plethora of different blockchain ledgers that are being used. They're all slightly different from each other. Some of them are used for the same sort of use cases. Some of them are very different. But this doesn't help adoption, because if you have different digital assets sitting on different ledgers, how can they speak to one another? How can you have a market that includes, that builds liquidity, bridges liquidity between those different assets on different blockchains? So this is something that we at Ripple have been working on. So we have partnerships with a couple of firms, Axelar and Wormhole. And what these firms do is they develop interoperability protocols, so standards for bridging between different ledgers, which increases the efficiency and security of cross-ledger solutions. And we've also looked at, for example, using building infrastructure directly across XRP, Ledger, and Ethereum. So, for example, our stablecoin OLUSD is issued on both XRPL and Ethereum. We also have an Ethereum sidechain, and that's a clever device because it allows people to write smart contracts in EVM compatible language, which can also sort of call functions on the XRPL as well. Mm-hmm. Yeah, so that's quite an important advance.
No, I think you are absolutely right, and it's quite interesting to see the work that's taking place, basically to kind of hide those or simplify those frictions between different blockchain systems. There's never going to be one that just does absolutely everything.
Definitely, and I don't think we want that either. That wouldn't be, there won't just be one ledger to rule them all, because each ledger is suitable for a different use case. So XRPL, for example, has been developed specifically for use by regulated financial institutions. So it builds in compliance features, features to make regulators comfortable with the use of the ledger. That wouldn't apply to every ledger, and it probably shouldn't.
No, you need the spectrum of use cases, or spectrum of ledgers with different functionalities for different use cases. I'm just aware that we're running out of time, but maybe just one final kind of wrap-up question, which is, if you could ask for one, coming from Ripple, if you could ask for one major structural change, or whether it's around interoperability standards or regulation or something else, what would the one thing be that you would ask for to really drive adoption further?
I think so. We already discussed regulation, and one problem that we see is that each jurisdiction is independently developing its own regulatory framework. Now, that makes sense for them to do. They're trying to protect local users from the risks, but crypto is an inherently borderless, fungible technology, and a lot of the value consists in being able to move value or build markets that are truly global and cross-border. And there is a risk of regulatory fragmentation, erecting barriers to the cross-border use of crypto technology. So, if there's one thing we would ask for, it would be greater international cooperation and regulatory harmonization to try to build those bridges between different jurisdictions.
So not just technical interoperability between ledgers, but actually regulatory interoperability as well, basically.
Yes, that's nice. Regulatory innovation. We'd like to see some of that.
Okay. Yeah. Matt, it's been great to have you here today. Thank you very much, and enjoy the rest of your festival.
Likewise. Thank you very much for having me, Chris.